We're going to present Latvian Shipping's presentation in two parts. I'll do the first one on the financials. We have Paul Thomas up here, who's from Vitol. He's the global head of shipping for the company, and has kindly agreed to give his views on the outlook for the shipping industry and some further information. So quickly going through company structure. We're ship owner in the handy size and medium range tanker segment. The fleet consists of 16 modern tankers with an average age of maximum 7 years. We have our own in-house technical management company, which services also third-party vessels. We currently have 2 on the third-party vessels, and then we're hoping to gain 2 more. We have approximately 500 seasonal seagoing personnel, mainly Latvian, and actually the Latvian sailors have a very good reputation within the global market. We have an office here on Elizabeth Street with about 50 employees, and we're listed on NASDAQ. Financial performance. EBITDA, it's stable. I mean, it's gone down. It's only because of our sale of vessels. We have a positive cash flow, you can see up there, of $12.4 million US. I think, sadly, this slide presents a slightly different slant on things. We've had an impairment of $55 million US. It's about 20% value. And I think you can debate whether it's 18% or 20% what you use. This is an independent valuation we use. This is not our own in-house valuations on the fleet. So there we are. We've also made a few other impairments which you can see in your pack and on the screen, but I won't necessarily go into detail. And I think at this stage I'll pass you to the more exciting part of the presentation, which Paul will give.
Okay, good afternoon, ladies and gentlemen. I'd just like to give you a very brief update as to the various factors that have and will continue to impact on the financial performance of Latvian shipping. Strong economic growth equals increased demand for refined oil, which equals increased demand for product tankers, which is our main segment. There is a direct correlation between economic growth and demand for product tankers. So on the demand side, economic growth, or the lack of it, will be the key factor in determining the future profitability or not for ship owners. Economic growth drives demand for refined oil, which in turn drives demand for tankers. The worldwide economic environment is fragile, as is the geopolitical situation, which is at the present time, at least in my opinion, not supportive of strong economic growth. The IEA, which is the International Energy Agency, annual global demand growth expectations for 2015 have decreased from 1.4 million barrels per day to 0.9 million barrels per day at the present time. European oil demand has decreased 2.5 million barrels per day since pre-recession levels. Perhaps not surprisingly, the price of crude oil has dropped 50% since June 2014. So is this a reflection of crude oversupply, or more negatively, a consequence of a lack of demand for refined products due to sluggish economic growth? The evidence so far would suggest that lower crude prices are a reflection of a sluggish economy. At the same time, we cannot ignore new technology which is improving fuel efficiency. Just in the shipping market alone, new modern product tankers are burning 5 tonne a day less than the older ships. And we're also seeing similar improvements in the airline industry as well. We're also seeing competition from other environmentally friendly fuels, LNG, natural gas, along with the growth of use of alternative fuels, as solar and wind. And certainly there is a move away from oil burning over future years. So that's the demand side. On the supply side, we still see net fleet growth for 2015 of close to 5%, and again net fleet growth of close to 5% in 2016. Now, net fleet growth is sustainable if that's aligned with robust economic growth, but if there are a surplus of vessels, this definitely has a negative impact on a ship owner's earnings. So, from Latvian shipping's perspective, we do need robust economic growth for the future profitability of Latvian shipping company. Okay, so if we just look at the outlook for 2015 and beyond. Robert's already mentioned that we suffered severe impairments to the fleet last year of approximately 20%. The main reasons for that are this sluggish economic environment, an acknowledgement that there is still many ships to be delivered, which could potentially put pressure on the market, and due to the financial stresses that many ship owners are still suffering. We expect earnings to be range-bound throughout 2015. We think we will be able to earn sufficient to cover our administrative costs and our debt and interest payment obligations, but no more. We do not, as a management board, envisage a situation where there would be dividend payments in 2015. The current financial status of Latvian shipping just does not allow for that. I would also add that our banking lending syndicate permission would be required, and given the current financial status of the company, we do not believe that would be forthcoming. One of the challenges that we have going forward is we have to look to refinance the fleet throughout 2016 and 2017. So we will require refinancing in the order of $150 million. And not forgetting that there is a debt outstanding to BN of $30 million. So they're certainly the challenges ahead that we face. So the business strategy going forward is still to employ the majority of the fleet on time charter contracts. So we keep them employed for a period of time rather than for individual voyages. That enables us to service our regular debt obligations to our lending banks. For 2015, we currently have close to 7 months of confirmed contractual obligations, which again, as I said, is sufficient to cover our administrative, our debt and our interest payments. We will look to continue to dispose of our non-shipping assets, nafta invest and real estate, which is currently under insolvency. Lastly, as Robert's already mentioned, we are looking to increase our third-party technical management services. We currently are managing 2 vessels from within the Ventspils group, and another 2 vessels will be joined in the coming months.